Hi, uh, this is Raju here from Precise Trader. Okay, the session we are going to discuss is taking full advantage of Precise Trading Zone, right? And I believe majority of you have come for previous session. Is there anyone who are coming new to this session? Please try to make this session as interactive as possible. Because as I always keep telling, because the more we ask and the more we make interactive, the more we can make this session as interesting, right? Okay, and we are going to do a unique way of teaching you how to do it because we use a different way of approaching this market, right? the Please take note of the risk disclosure. Okay, whatever we are going to discuss, this is going to be purely education. And also for those of you who feel you want to take the trade, okay, if we get the signals, and of course if the market permits, then we would be giving a live signal. But stick to your rules and stick to your limits because you must understand that there is this. We are working on probabilities, right? And there is no one in this world, who can predict the market 10%, meaning 100%. So we are working on risk reward ratio. So please stick to your rules, right? And for those of you who are new to this session, okay, I just want to let you know that we will be focusing on all these crosses. We will be focusing on 36 crosses. For example, like Euro USD, Pound USD, Dollar Yen, Swiss Aussie, Loonie, Kiwi, and Singapore dollar, right? And any one of these crosses, you can ask any questions pertaining to this crosses. And please also specify the time frame which you wanted to discuss because we believe in precise approaching the market. Because rather than if you ask me a vague question, what do you think about euro? This is going to be a vague question because I can tell you what is going to happen, down the road, maybe next month. But I think for the benefit of others, and also, we want to maximum utilize this time. Please try to be more precise on the time which you want to ask questions. And the theory behind our teaching or approach to the market, we use price level principle, or we call it a PLP, right? And we are proud to say that we invented the system, meaning in the sense we have a different way of approaching the market. Rather than we take the market orders, we only take entry levels or exit levels at specific levels. So the good thing is, of course, your risk versus reward is always justifying, meaning in the sense you approach the market in a very easy manner. But of course, the bad thing about this is sometimes you tend to miss the entry levels. But that I wouldn't consider in the long run. It's a bad way because you must understand that if you want to be in the business in the long run, you must learn how to approach the market in a very much more easy way, and also the risk reward justifies. And for those of you who wants to know that how do we get these numbers, because majority of you always be asking this question, how do you derive these numbers, whether do you use a pivot point or etc. But to answer that question, we believe we use Fibonacci numbers, we use Andrews Pitchfork, we use moving averages, we use trend channels and Gann numbers. So how do we use these numbers is basically we use all these tools to derive that numbers. And when more than 2 or 3 tools intercept or coincide, that's where we derive the numbers, and that's where we use the levels. So you must understand, for those of you, I'm sure majority of you in this room are technical based traders. Is there anyone in this room who are fundamental traders? Because technical based traders, I'm sure you all are using specific tools to follow in order to take your trading decisions. So this is one of the way which we approach the market. And also do take note that every session we do give a trading tips. Okay, and for those of you who have missed the previous session, just you can run through and ask yourself how many of you have made that same mistakes, or how many of you have done this mistakes repeatedly, in order for you to learn from this mistake. And the one I'm going to discuss today is don't let your profit become a loss. Okay, I'm sure many of you are asking, because I'm sure many of you in this room, I do not know what kind of strategy you use or what kind of game plan you use when you approach the market. But what I normally do is, when we take a trade, as I told you, we will be approaching the market in a different way, and we will be approaching the market on a specific level. So when the price takes a specific level, what happens is we take a trade, and the moment when the market moves in our favor about 30-35 pips, okay, we usually raise our stop to cost. So when that is done, okay, chances are what you would be doing is, most of the trades would be either a break even or making money or stopped out. These are the three probabilities which you would be ending up on your trades. So when you are able to break even and make profit, okay, the losses will take care by itself. And what I believe is, usually when you take your trade, okay, your risk versus reward should be not less than 1:1. Okay, I do not know whether any one of you have a specific game plan, meaning in the sense, because see what happens is, okay, I've been in the business for almost like 15 years, and I've been doing a lot of webinars and workshops, and most people who come in, okay, the moment once they get into the trade, and the moment once they are in the money, they get carried away, and they do not have a specific game plan, meaning in the sense, once they are in the profit, they feel, they tend to be greedy, and as a result, what happens is sometimes the profit will become a loss, if you do not have a proper game plan or proper way of approaching the market. So this is one way I would want to suggest you. And for some of you might feel that, this is maybe it's not the right way, because especially if you are a short-term trader, or you are a position trader or long-term trader, then 30-35 pips may not work for you. So on that note, maybe you can increase your stop loss to 70 pips or 80 pips. And I don't believe in putting stop loss more than 100 pips, because I think when you put a 3 digits, especially, you have to be a bit careful, especially nowadays the market is in very hectic and very volatile, right? So that's the thing you need to take note. Now let's look at the market before we give a trading tips or trading tip, as this is the usual way which we work. And the data's out today. I think a couple of data's out. In fact, like retail sales and a couple of data's out, right? Because we usually we do not take trades when the data announcement is happening, because especially if you are a scalper. But if you are a long-term trader, or overnight, you want to hold your positions overnight, you can do so with a bit more higher stop loss availability, right? And also do take note that the market has been hectic for the last couple of days, and today being a Friday, you have to be extra careful, because the euro has started to break new lows, and we have to wait and see for the market to give us a clue whether the market is going to close near the lows or it is going to have pullback. Of course, we have to wait for the answer from the market to give us a clue. If you look at this, the strongest for the day, in fact, the dollar has been quite strong, and if you notice, euro has been about 60 pips from the previous US close. Pound has been about 60 pips down. Swiss is about 58 pips. Dollar yen is about 27 pips, which is dollar yen is strengthening, right? So this is, in fact, the others are pointing that the dollar strength, and this is dollar weakness is pointing. So in fact, dollar yen is the strongest cross for the day. Canadian dollars is about 60 pips, and Aussie, Kiwi, all these are quite low, right? So basically, what you should be doing is, we approach the market in a different way. Okay, how do we approach is, okay, we look at the market, we see the strongest and the weakest, then we take our trade decisions accordingly. And we would always like to go with the strength and also with the weakness. That means, if the particular currency is strong, that means we try to buy that cross, or buy that cross against any of the crosses. It depends on whether the market permits. So then you take your trading decisions. But right now, the market has been pretty quiet, because the market is waiting for the news. So we can do something else, at the same time, we can learn as a group. Okay, the question is, just let me look at this. Okay, where do you get these numbers? Okay, we have of course, we have a way of approaching the market. As I told you, maybe I can show you that screen just a quick glance of how can we uh, look at this and see whether the strength against the weakness. Let me just give me a minute. I'll just pull the screen and show you that screen. In fact, this is how this is a table which we use, and this is how we use this table to quickly to take the decisions. And if you see the strongest and the weakest, okay, when you see this all once, okay, that means that cross is the strongest, and we can do on a specific time frame. So here we have mentioned that we have this is a 360 minutes, which is a 6-hour chart, and this is from 9 GMT, right? So this, in other words, we still have now is about 11:15, so we still have another a couple of hours on this. So overall, is if you see this, pound has been the strongest for this time belt, and Aussie has been the weakest, followed by the in fact Kiwi, the New Zealand is also being the weakest. So basically, what it does is, you can look at it like, for example, when you look at the pound on to your right, you see the best cross to trade. So pound New Zealand, because it makes sense, right? Because pound has been the strongest and New Zealand has been the weakest. So overall is pound New Zealand would be one of the cross to look at. And this program is, we have it under our website. You can come in. We have a free trial. You can come and use it, and you can see it for yourself. Okay, let me quickly run through the chart and see whether that gives us a trading decision, or how can we go on and look at the chart. Let's look at pound New Zealand, right? As I told you, this is pound New Zealand. Is there anyone in this room trading crosses? Just quickly tell me how many of you are trading crosses, or how many of you only look at the majors. Just say, okay, is there anyone says yes, Y and N, will do fine, because is there anyone in this room trade in crosses? I do not know how many of you look at pound New Zealand, which is a very volatile cross. But what happens is, of course, the spreads are quite wide on this cross. So let's look at this, right? In fact, if you look at this daily, okay, let's run through this chart and see whether we get a trading signal on this particular cross. Okay, what has happened is, this is trading on the weekly, right? It is trading below the open. So overall is, the selling pressure is still happening. And you see the price open. Let's see what is the price open. Okay, the price open for the week is about 206.40, and it's trading about 200 pips lower than the open. So let's run through the chart, and this is one way I approach the market. That means, you must have a bird's eye view, and from there you tone down, right? And see, and you go to the lowest time frame before you take your trade. So when you do that, the chances are, you would be in the right side of the market, first thing, and the second thing is your risk versus reward would justify. So let's look at this chart. Okay, it's trading, in fact, it is trading at the open, right, for the day, and overall is, the weekly is trading below the open. So the picture you should be concluding is, on the weekly, today is coming to Friday. As I told you, we have to be extra careful on this decision made on this particular cross. So let's say we look at a 6-hour chart. The 6-hour chart, okay, what it's telling you is, okay, it's trading above the open. So, and the daily is also is trading at the open. So what this is telling you is, okay, this market is having a pullback. So if you want to sell, first thing is, you have to be extra careful, because it's trading above the day open, right? So, and again, the 6-hour chart is also trading above the open. So overall is, the buyers are coming in strongly. And if you notice, 3 times, in fact 4 times, right? The level 203.70 tried to breach, and the bulls are trying to protect the levels. So this is the thing you need to conclude, and this is how you have to approach this market C, and finally we decide whether to be a buyer or seller. Okay, let's say we look at a, a 2-hour chart. Okay, 2-hour chart. How many of you are well versed in candlestick? Okay, this shows a nice hammer. So again, we have to see whether this market has already bottomed for us to go for a buy. And again, the next question I need to ask is where to buy and where to put my stop loss and where to exit. So these are the 3 questions I need to ask and find an answer before I pull the trigger. You know, when you do that, chances are, you know, you would be always in the market and you would be closely watching the market, and you may not be in the wrong side of the market, right? So the 2-hour chart is just moving up. In fact, the new 2-hour which is just started, which is commenced at 11. So we have another about 1.5 hours on this particular candle. So the question we need to ask is whether the price, is it going to go higher and higher, or it's going to have a pullback, or it's going to turn. So let's say we look at a 5-minute chart. So when you look at a 5-minute chart, this is where we need to see, and this is where we need to take our decision whether to be a buyer or whether to be a seller. So right now, if you notice, okay, as I told you previously, the price low tested at 203.70, and it had a break mild. It break marginally, you know, below that level and quickly pull back. So the question we need to ask is, we do not know whether this is going to be a bull trap. Okay, I'm sorry, it's a bad trap, because you know you're selling and it's breaking the low. So we do not know whether this is going to be a bad trap. But to give me an answer, I'm looking to buy this cross, because as I told you, we had this the highest, you know, the strongest and the weakest. We did analysis which says pound is going to be the strongest. Of course, you know, sometimes we have to see whether the pound has moved out of our resistance zone 1 or support zone 1 to give an answer whether this is going to be a genuine break or it's going to be a false break. So right now, at this moment, the price has not breached any of our resistance zone 1 or support zone 1. Okay, what do I mean by that? Okay, for those of you who are coming in new, not to worry, I will explain to you that. Okay, let's look at on the pound yen, a pound New Zealand cross. Okay, we have a resistance zone 1, which is US resistance zone 1, which is 204.45. Okay, and do take note that whatever the levels I'm giving you, you have to use plus minus 10 pips on this cross, because this is crosses we do have a different spread, because the brokerage firm will charge a different spread, so we need to have some allowance on our levels. So we have a Europe resistance zone 1, which is 204.85. Okay, plus minus 10 pips, and we have a Europe support zone 1, which is 204.05, and we have a US support zone 1, which is 203.65. So in other words, okay, the question I need to ask is, we have 4 levels here, all right? So I can take the trade based on and look for a exit, and ask myself, you know, whether the risk versus reward, does it justify before I take the trade. So looking at this, let's say I go on a 1-minute chart. Okay, the 1-minute chart. So if I know that I'm having all these levels, again, I told you this has to be plus minus 10 pips. So especially if you're trading this process, and when we use our levels, if you are trading on the majors, then you can use about 5 pips variance. So majors and minors, because you should know that most brokerage firms, you know, they do have a narrow spread on the majors and minors. So how can I approach this market, and how can I trade this market? The question I need to ask is, this is what? Then I can tell, and you can straight away, you can take a trade with ease. Okay, how many of you have attended our monthly webinar? I know we have done this, and how many of you agree with me that this is has short-term valley has already been formed on the 5 minute. So how many of you can you quickly answer so that we can run through the session much more faster, and we will be able to attend with more questions and this. So for those of you who have attended, okay, I'm sure you agree with me that this valley is already been formed, right? So now the question I need to ask is, should we look to buy or sell? How many of you in this room agree with me that I'm looking for a buy? How many of you in this room says that looking for a buy? Can you quickly say So at least okay, for those of you who are not sure, okay, never mind. Okay, we'll give you an answer. Is there anyone in this room who wants to sell this market? Okay, at least majority of you are with me, right? So I am quite glad because you are with me. So now the question we need to ask is, okay, we are going to buy. Okay, where do I buy? Okay, this is two ways I can buy. One is, as I told you, if I'm right on this market, if I'm right that the market is going to make higher highs, then the price should not break this low. Do you all agree with me? Right? So the thing is, the price should not break. So now the question I need to ask is, okay, where do we buy? And where is going to be our price target? So if I'm going to buy, okay, let's assume, okay, I can look to buy at 204.10. In fact, let's see what is the exact price it's trading now. Okay, I have a pound New Zealand. It's trading at 204.28.38. Okay, can you hear me clearly now? So I have a price is trading at 204. Is it better? Okay, it's trading at 204.33.42. So one way is I can buy at the break of this, which is 204.60, and of course, if I'm going to buy at that level, then if I'm going to put my stop below this, okay, this is going to be about 100 pips move, or 100 pips stop loss, 204.60 and 203.60. So which is not a good idea. So what I should do is, okay, wait for the price to come down. Okay, this is, I'm looking at a 1 minute chart now. Okay, I'm showing you a 1 minute chart. So finally we decide on a 1 minute chart. So two things I can ask is, one is whether I want to take this trade, that's one, or second is, I tell myself, okay, maybe I'm not that confident. Okay, wait for the market to break out really, and then I can go for the trade. So now you can see, for example, here, if I'm going to go for a long, I have to take note that my resistance is going to be 204.85 and 205.35. So when I draw these two levels, then I would know that, okay, straight away I would know the answer of my risk versus reward. So I early on, I told you during the beginning of the session, if you need to find, you need to find the your entry level, your stop loss level, and exit level. When you have found the answer for all these three levels, trading can never be as easy as you can imagine, So what you should be doing is, okay, right now is, okay, let's say there's two ways I can approach this market. One is I can go for a break on this, okay, and I can put a stop below this, which is 204.05, and plan to exit at 204.85. I got a watch, and of course 204.35. Okay, let's say I give you as a trading tip. Okay, let me show you that screen. Okay, this is we are going to buy pound New Zealand. Okay, this is trading at 204.45. Of course, for those of you who do not trade crosses, I suggest you stay put, because this is going to be the spread is going to be quite wide. So I would be buying on this at break of stop buy at 204.60, and my stop loss would be below. This is going to be below that 204.10, because see, one thing you must understand, for some of you you must understand that the stop loss when you put in, you must go with the market because I do not know, because down the years of teaching, a lot of clients, they put in stop loss uh, based on the pips. Okay, in other words, if I ask them, like what is your stop loss, they'll give me an answer saying that I can only afford to lose 15 pips. I can only afford to lose 20 pips. So I use only 15 pips and 20 pips. I do not know whether is there anyone of in this room, put in stop loss in that way. Please, if you do that, because you must understand that means you are doing on your emotions, which is not a good idea. When you put your stop loss, you must follow the market because you must understand that when you put a stop loss, you put it at a level in such a way that you don't get stopped out unnecessarily. Otherwise, you don't take the trade. That's how you should tell yourself if you want to become a quality trader. Of course, if you want to be a quantity trader, like every now and then, you can do, like, and trust me, you'll be literally working for the brokerage firm because every now and then, you work on 15 pips or 20 pips and you don't make, and especially if you put your stop loss about 15, 20 pips, chances are, you would be stopped out most of the occasion and probably you would be working for the brokerage firm. So try to follow the market. So I'm going to put a stop loss here. And where do I plan to exit? Okay, remember I said I have a next resistance level which is 204.85 and the next higher level which is 205.35. Let me give you that level. We have a 205.15. Okay, that's another resistance. Okay, let's say we exit at 205.15. Okay, this is going to be one way I want to approach this market. Another way is the same way. Okay, if you feel that, okay, I'm not that comfortable on that trade, okay, let me go for a limit buy at 204.15. Okay, that means I want to be very conservative trader. That means I want to be a conservative trader on this. I do not want to take this trade on breakout because I feel that I'm not convinced, the market may have some pullback. So when you do that, this one would give you a better risk-reward ratio and a better entry level. So when you do, like if let's say I'm going to do a limit buy at 204.15, I put a stop loss of 50 pips and this one would give you at least 70 pips. Again, I'm being a bit conservative on my exit levels because I feel, I want to exit before the price reaches our level. But the difference between these two trades is, this trade is, this one, if you are an aggressive trader, you can take the trade because you feel that you do not want to miss that trade or miss that move. If you feel that if you're a conservative trader, then you take this entry. But again, you must feel that you may have missed that entry. So once you miss that entry, then you shouldn't feel bad, or you shouldn't be not happy because of missing the trade, because you have done your work in a correct manner, but you missed that entry. So this is how you approach the market, and this is a very, I hope, it's crystal clear, meaning in the sense, say I have an entry level, I have a stop loss, and I have an exit level. So when I know all these three levels, then when I take the trade, once I key in the trade, I can go and do my work, and I can relax, So this is one way you can approach the market, and I'm not saying this is the best way, but this is one of the best way I would consider, because especially if you know that the price is going to reach that level, or once the price breaks the level, then things can go in much more clearer and on your way. Of course, if the price being stopped out, okay, you wait for the next entry level, all right? And you must understand that trading is a business. Okay, we are working on probabilities. So of course you have to approach. I mean, when you are making money, you must welcome the same way when you are being stopped out, and when you stick to your limits always, then I don't see the reason why you should get scared. In fact, 2 days back, one of my clients called, and she was saying that she was really scared to look at the market. So, when that scenario happens, is there anyone in this room, who are in that situation? So for those people, who feel that, you are scared to approach the market, the best thing or the best thing to do is, maybe one suggestion I can give you is to gain back your confidence. One way is you can start off again by trading with a demo account. That means, you start to do a few trades with a demo account to gain your confidence. Then you come back again in the business with real money so that you can approach the market in a nice way. Another way is you reduce your contract size. That means if, let's say, your trading contract size is 50,000, reduce your contract size to 10,000 or even 5,000. Then that would be another way to approach and get back in the business. See, there is a lot of way and a lot of approach you can approach the market. And of course, you need to have that kind of experience and expertise to tell you, how to approach the market when your confidence is at your peak, and approach the market when your confidence at the least, or when you are getting scared. Okay. Okay. The question I need, please. I think as I told you, the market is being very quiet. Okay, we can discuss the market. Feel free to ask any questions you want to do or anything you want to discuss, because I'm quite well versed in most of the technical tools. So I mean, try to make the session as interactive as possible and make it more uh, interactive. Okay, the question is, how do you categorize them from Europe and US session, support and resistance levels? Okay, basically, we have, as I told you, we have a unique way of approaching the market. Okay, maybe I can show you one sample, all right? How is, because we have a US zone levels, we have a Europe zone levels. So let me show you that. Maybe, by the way, which cross you are interested? Maybe I can show you that cross, so that that would be easier for you. Is there any cross which you are interested? Maybe we can discuss on that cross. Okay, pound yen. Okay, let me show you that pound yen cross. Pound yen. Just give me a minute. Okay. Yeah. So this is the pound yen cross, right? So we have, as I told you, we have a different way of approaching the market, and all you can see is only numbers here. So of course, you must learn how to use the numbers, and it's very easy to use once you understand how to use the table, because you must understand that this is the number game, right? So let's look at this pound yen. Okay, we have a resistance zone 1. Okay, we have at US resistance zone 1, which is 135 figure, and we have a support zone 1 at 134.30, and we have a resistance zone, Europe resistance zone 1, which is 135.90, and we have a Europe support zone 1, which is 135.20. So basically, I use all these levels and I take my trade entries at this level. So my decision is, okay, I have to look at what is the trend. Okay, if you see the trend is, the hourly trend is sideways down while 135.90 holds. That means as long as the price doesn't break that 135.90, I'm expecting the price to come down. But the question you need to ask yourself is whether the downside is it going to be limited, or there is more room for the price to go down. So what I'll do is I'll discuss on this chart, and I'll show you how can we trade this instrument and how can we trade. So here again, remember this levels 135, 135.90, 135.20, 134.20, 134.30. These are the 4 levels you need to remember. And our entry levels is triggered at all these levels. That means I can be a buyer at once the price breaks 135 figure. I can also be a buyer if the price tests 134.30 twice. So these are the two strategies if I'm going to be a buyer. And if I'm going to be a seller, I can sell the break at 134.30, or I sell at 135 figure if it tests twice. So this is going to be the other strategy. So let's look at the chart, alright, and see how can we approach this market, especially when you trade crosses, okay, the good thing you need to, of course, I would say the good and bad, right, is you should see both the cross. You should pay attention to both the cross. Okay, what do I mean by both the cross? Okay, that means you should pay attention to pound as well as dollar yen, right? So when you see whether the dollar is strengthening or the pound is weakening, I mean whether the yen is strengthening or the pound is weakening, then when you find the answer to that, then your approach to this market would be crystal clear. So, excuse me. So if you to give you an answer to that, okay, the pound has been strongest, in fact, on the US session. Okay, just give me a minute. So basically, the pound is strengthening during the US session. And if I'm looking at early on, you remember I showed you the table. That's where I I look at it to get an answer to that. And for the day, overall the pound has been pretty flat. So what is telling you is, okay, this pound which is strengthening, it can be a retracement. So that is the thing you need to conclude, or that's the thing you need to conclude. So let's see, we run through this from the weekly. Okay, it is approached near the opening, which is it's not a good sign, because if you are a seller, you have to be extra careful, because on the weekly it is approaching near the open, right? If you are a seller. But of course, if you are a buyer, again, you need to see where is it you are going to buy, or where is it you are going to approach a buy position, right? So if you look at on the daily, it is trading well below the open, or the opening price is 135.50, and it's trading below the open. So overall is the bears are still in control, but you know the bulls are trying to push the price higher, right? So we have to see where to sell and where to buy. You know, that's the thing we need to ask and to before you take a trade. So let's say we look at a 6-hour chart. Okay, the 6-hour chart, it is telling you of course this candle is not completed. Okay, this is telling you a hammer, and we still have another 2 or 3 hours on this particular candle to close. So we have to wait and see on this approach. And let's say we look at a 2-hour chart. Okay, the 2-hour chart is telling you a hammer which is already formed, and right now the price is moving. Okay, so now again the question we need to ask is whether to be a buyer or seller. Okay, again, as I told you, to know the answer for that, we need to, and all our decisions, okay, remember I said, okay, all our decisions has to be based on a 5-minute and 1-minute chart. So we look at it, we have scanned from the weekly. So I just summarized what I've seen on this particular cross. On the weekly, it is approaching near the open, which is not a good signal if you are a seller on the weekly, because you must understand that we are coming to end of the week and today is the last day of this, so we have to be extra careful on that. And on the daily, the price is trading till below the open, but the level to watch is on the open is 130. What was open? Okay, 135.55 if you recall, right? So if once the price breaks above 135.50, then I have to be extra careful on that, right? So now we look at a 5-minute. Okay, running through this, how many of you in this room feels that, okay, now should we go for a buy or should we go for a sell? Okay, having this level in mind. Okay, let me give you that level early on. I said, because then you know your thing, your approach would be crystal clear. Okay, let me point these levels. Remember I said resistance zone, Europe resistance zone 1 is 135.90. We have a Europe support zone 1 which is 135.20. We have a US resistance zone 1 which is 135 figure. And we have a US support zone 1 which is 134. 30, right? So, having all these four levels in mind, now you tell me, or how many of you in this room, first my question is, should you be a seller or buyer? That's one. Now the next question is, where do you want to be seller? And where do you put your stop loss? And where is going to be your profit target? Anyone, I have about 36 people in this room. Okay, maybe anyone can give me an answer? Can you give me all these three levels so that, we can discuss this and see how does this market respond to us and see how can we take the trade. No, you tell me the levels, because I'm more interested in giving me the levels rather than you just say resistance and support. Because see now, as I told you, I want you to approach the market in a very a crystal clear manner, right? So that's what you should be doing it and see. So okay, for those of you who are keying in at levels at 135.20, okay, where is it you're going to put your stop loss and where is it going to be your price target? So that's May you said buy at the pullback at 135. So that means you do not want to be a seller. Okay, I don't want to disturb you. So for those of you who want to be a seller, my question is, where is it going to be your stop loss and where is it going to be your price target? Can you give me an answer for that? Okay, this is what this is the perfect answer I'm looking at, So can you, if you do it in this way, then we can learn as a family, and we can, and our learning can be much more easier. So data has given me, okay, you sell at 135.20. Your stop loss is 135.90, which is 70 pips risk you're going to take, right? And your price target is 134 figure. Okay, you're looking at 134. So to give you an answer for this, okay, for data, what I'm trying to tell you, or for the rest of you who are in this room, the question you need to ask is, the market is moving up. Okay, first thing I need to ask is whether the market has reversed, because overall is you are still in the right track, meaning you are looking to sell. Okay, that's the first thing. That's a good thing about this, is because you all are looking to sell, which is the right answer. But the second answer is, okay, if you are looking to, what happens if the price breaks 135.20 and goes higher and turns at 135.90? Then data, you would be stopped out unnecessarily, or whoever following him, would be stopped out unnecessarily. That's the thing you need to take note. And another thing I need to ask you, another suggestion I need to tell you is, if you are planning to buy at 134, you must also ask yourself whether the price, is it going to go to that level? That is the thing you need to ask. Okay, I told you again, bear in mind, okay, remember the price is approaching our weekly open, right? So you have to be extra careful. So why I'm trying to given or caution you this is because, see, when the market is being nice to you, take it. When the market is being like a jigsaw puzzle, meaning it's not being very clear to you, then you have to be nimble. Okay, what do I mean by nimble? Meaning in the sense, you take 30 pips, 50 pips. You must always save for the rainy day. And I always believe that every day is not a Sunday, right? So what I'm trying to tell you is, every day, even you make 50 pips or 30 pips, even I do not know. Anything less than 35 to 50 pips, I feel it's not worth considering to take the trade. That's the way I approach the market, and that's the way I want to be approached, right? So so when you make 35 pips and 50 pips, so sometimes when you do this kind of trade, it can be a savings, especially when you when you were being stopped out, or when you are being stopped out unnecessarily. So that's what I believe in. So you must be again, I'm telling you, this is not the only way you should be approaching the market. This is one of the suggestions which I'm suggesting you. And if you feel it's good, then you can adapt to it. But if you feel it's not good, then I'm not going to force you, right? So now the question I need to ask is, see, the market is moving higher. Okay, my first question is, if you are going to sell blindly at 135.20, okay, this is like catching a falling knife. Okay, this is, you're taking unnecessary risk, because having all that in mind, okay, the price is retracing above the open on the weekly, on the daily 135.50. If you recall, today's open is 135.50 level, okay, which is another barrier which is we have overlooked, right? So once the price breaks above this, then we have to be extra careful. Of course, what will happen, or what the price will do is, the price would move, and whoever, all those bulls, or whoever bought this levels, they would be quickly planning to book their profits, and definitely you are bound to get some retracement. But you must understand that having all these levels in mind, so when the price falls, your previous resistance will become as a support. Do you all agree with me? For those of you who have been technical based trader, I think you should accept the fact. So my my question or my suggestion is, if you are going to sell at this level and put a stop loss and put a buying at 134, what I can tell you is, you are being very optimistic, which is honestly, I'm not saying that this is not going to happen, but as I told you, we are working on probabilities, and that's not a good idea, because this is because with a lot of uncertainties happening in the market, like as I told you, the weekly, all these levels, I've given you. Okay, being so optimistic of about 120 pips price target, I feel, it may not work out, right? So you have to be extra careful. So how I can approach this market is, to give you an answer, I have to wait for the confirmation of a short-term peak, then I go for a short. So for those of you who do not know what is a short-term peak or short-term rally, what I would suggest is, try to go and look at that early on the transcript link which you give monthly webinar. Just go and have a look. It's about 1.5 hour webinar, which was a very good webinar, which we had a very good session. It should give you an eye-opening session. Okay, then you would only sell when you see a short-term peak. Then you book your profit at, if let's say the price turns, let's assume it turns here, right? My price target would not be below 134.30, because I would know that the 134.30 is going to be a support now, So that's the thing you need to take note. So try not to be over optimistic, especially when the market is telling you a lot of uncertainties. So the only good thing you have said is, selling is right, but when do you sell is, we have to wait. And remember, I said, okay, this is a 2-hour chart. Okay, let's say we are looking at a 2-hour chart candle. Okay, we have this is, I do not know what is the 11 GMT, right? So we have another 1 hour more. Okay, we have another 1 hour more for this candle to end, right? And for you seeing a hammer with a green candle coming here, a Dada, Calf, all these people, who said, we want to have a price target of 134. Please try to be extra careful, because the market is not, because the market looks like it is going to bottom. So you have to be extra careful when you want to look for that kind of risk-reward ratio. Okay, I hope it was crystal clear, right? So I think anyway, I think this is today. I unfortunately, because I think it's already going to be an hour. We felt this is a good discussion. So I don't know whether I have any questions, any other question to answer. Let me see. Limit buy is below the price. Okay, euro pound. Okay, euro and pound. Okay, if you're looking at it, okay, frankly speaking, both are moving in the same direction, right? Euro pound. Just quickly run through this thing. I don't want to hold you long, right? Here, we see here euro pound. In fact, both the euro and the pound has been weak, today. So if you are looking to do anything on this, I would suggest best to, of course, you have to be a bit nimble or wait for trade accordingly. That means, just follow because see, the best signals would be when the euro is strengthening, when the pound is weakening, or when the pound is weakening, or the euro is strengthening. So if you notice today, like both the euro and pound are breaking the new lows, and in fact, the pound is going to test that the previous low which it made at 144.75, if I recall correctly. So you have to be extra careful when both are moving in the same direction. So that's the thing I need to suggest on that. Um, Sell at the resistance, buy at the breakout. Okay, US Canadian 1 hour chart. US Canadian 1 hour chart. Okay, I don't look at a 1 hour chart. Okay, honestly, I don't look at a 1 hour chart. I usually look at 2 hour chart. Okay, for those of you who are using, okay, please you go ahead. But I feel it's a bit noisy. So that's uh, my opinion on that. So if you look at on the daily, okay, in fact the price has fallen. In fact, yesterday was a doji, and today the price has moving up again. Bearing in mind that at the end of the week you have to be extra careful. So you look at a 6 hour chart, it has been moving up. So it has been struggling. The buyers are struggling to push it higher. So this is, but again, I think the price should move higher. So maybe what I can do is I can give you the levels, the resistance zone 1 and support zone 1. We have a resistance zone 1 which is 10280 and resistance zone 2 which is 103. So we have 280 and 3. We have two levels to pay attention to if you are a buyer or if you are a seller, if you are looking to sell. Look at this on the 2 hour chart. It has been moving higher. So basically that's the thing. So what I feel on this is if the price creeps lower, okay, it is better to be a buyer than go for a seller because as long as that 10225 or even 10215 or max 10165, the price should not go below this low today. So anything around this level should be a, a, a buying opportunity. So, but that again, it's up to you to decide. I mean, and you must understand the risk versus reward. You must use it, and you should be trading the market accordingly. And by the way, I think the pound New Zealand order got filled. So early on we were discussing this. In fact, if you notice, the market started to break that 12460, and right now it's trading at 6570. So that's the thing. I mean, the order which we gave is more or less is triggered. Okay, I think with that we want to conclude the session, and I would like to thank you for coming to this session. And of course, it was a wonderful session because we are having a good discussion. And I also take this opportunity to thank FX Street for organizing this wonderful event. And please take note, we have two sessions with FX Street every week, every Tuesdays and Fridays. And we also have an in-house webinar which is every Wednesday. You can also come down. It's also a free session. So if you feel, you can come and register with us. And please take note, one suggestion is when you register, please give us your information. A true information, because otherwise the website will not entertain. So that's the thing I just want to suggest to you. So please feel free to come back and give us your support. And once again I wish to thank you, and have a great weekend, and goodbye.